Okay, so let's go. This is the trade recap of 21st August 2026. Futures New York session, NQ trade basically. So we were bearish all the week, okay, anticipating this. Sorry, we were bearish all the week, anticipating this level gap to be filled at least up to a half and then go higher or maybe lower if that doesn't hold. Right, I expect that to go up, but then later on, as I did not upload a video yesterday of this trading session. I have started trading futures from 2 days ago. So this is my third day trading in Q futures. And before this, I was trading. I have traded 1.5 years of gold and then 6 months in currency pairs. So using the same strategy. And that strategy was originally made for this NQ. Okay, but it also worked in other pairs as well. So here, yesterday, of course, the bias was bearish, and today as well. The market was when I opened the chart, the candle, as we can see, opened here. Okay, opened here, right? And it was sorry, it opened here and it was here almost, right? And I was still expecting bearish move. Okay, first I thought the price might be bullish, of course, because the weekly candle it will create the swing. Sorry, the Judas, the wick for the weekly candle. So maybe because of that, we might see bullish day to day. And this slow build up was kind of a little bit convincing towards bullish. But later on, when I dropped to the lower time frame after some time on the chart, I realized that this was so much of low resistance liquidity. Okay, when you go to the even lower time frames, as you can see in the 15-minute itself, you can see this properly. Let me put it on. So here, this is the actual trade, but let me take you through all of it. So as you can see, this is a lot of low resistance liquidity, a lot of low resistance liquidity. Okay, being accumulated from yesterday, literally, like you can say yesterday. For me, it's today in India, but you can say, yeah, you can say yesterday, as you can see 20th. So this is almost the end of yesterday's New York session, New York PM, and after that, even Asia accumulated, just accumulation, and slowly moving upward, and same goes with London. And this is a lot of low resistance liquidity here, and because of that, I assume that, yeah, I got the confirmation that nah, the price is still gonna be bearish, and it will take out all this, okay, and go lower. So now, what was going on is I first of all marked the midnight open, and the price gave a little bit of a Judas swing below and started moving up. But due to the accumulation of this, I decided that nah, this is gonna go lower, and this 8:30 open happened, and a little bit of above, as we know, the 8 after 8:30, the Judas swing of New York AM session will be forming. So I waited for it, and after some time, as soon as I got the signs that now the market is gonna flip. Okay, now the market is gonna flip. The price was already in this 1 hour order block. Okay, 1 hour bearish order block from a long time, like from 2 hours, it was inside it. Okay, and it tapped into the CE of it once, and then this. The reason behind this trade was first of all this. Okay, it's in 1 hour order block, bearish order block, which will push the price lower. Alongside that, if you want to consider this an order block, that is also one, but I don't consider that because I'm in doubt of it. Like it might not be that. Okay, now coming to the this time frame, 15 minute. So on 15 minute, as I said, the 1 hour order block, bearish order block, and the price was, I was expecting the price to move lower, but I kind of waited. Like I was first of all waiting that maybe I will get some reason to go down, like which is like some other reason to go down. Okay, and then the 8:30 micro started. 8:30 micro. Oh, sorry, 8:50 micro. The first micro of the AM session started, and in that time frame, okay. And after that, first of all, this is the only reason I went short. Okay, clear as that. Then price, what happened is, okay, I saw signs in the price. Let me take you to the 5 minute. Where did I saw this? This is the place where I saw it. Okay, this is the place. this candle, this strong displacement, the market structure shift, fair value gap, which is 2022 setup, which I trade. So this you can see the registered price action was higher here. And alongside that, I later noticed it. I wasn't aware of it, but later when I was in this trade was completed, and I was taking the S&P. There was a S&P here. Okay, there was a S&P here. In the NQ did not take out this high, whereas NQ did not take the high, but S&P did, or you can say ES did. Okay, and that is another conference. But in that moment, I did not know about it. Okay, let me be honest with you guys. I did not know about it. Okay, and the only reason of the trade here, first of all, 1 hour. It was in 1 hour order block, very short order block. Okay, and the other reason is this. Okay, this fall. Like literally, they are sometimes the candles just tell you the story, and this is just because of my market experience. Okay, it's not related to something else or some magic trick. No, it is completely related to my market experience. And as soon as this fall happened, this this candle formed, and in that moment, I'm looking at lower time frames. Clearly, I was on 30 seconds. I was waiting. I was fucking waiting for the price to tap into this one. Okay, as you can see, I marked it on 5 minute as well. The 5 minute FVG which was formed, but it was in premium. So sorry, it was in discount. Whereas we should enter in premium, right? So my entry was somewhere around here. Okay, at the top of this FVG. In that place, in the place of my entry, which is the initial idea of the entry. Okay, this one, this FVG was there. Okay, this FVG, this candle's FVG, I was targeting this. Okay, my entry was here, and I planned my stop loss to be here. Okay, and target to be somewhere around here, these lows or something like that. Okay, I did not decide to target it, but somewhere lower. Of course, I was targeting the low resistance liquidity, and the price tapped into the 5 minute fair value gap, and here as well it tapped into it, but it did not give the equilibrium. Okay, this is the exact point where the equilibrium was on the 5 minute, and it did not give it. Clear as that. And price started dropping lower, and then I was trying to get an entry here. Okay, yeah, maybe it filled the equilibrium, but I think it did not. I personally think that it did not. Maybe in that moment it did not. I assume that it not. Yeah, it did not. Okay, I was keeping my entry here somewhere around here, which was a consequent encroachment of this fair value gap, and I was thinking that the price might hit it, and my stop loss would be here, and I will just move with it. But later on, the price started moving lower and lower. Then this opportunity came in, this fall, giving another fair value gap, which can be used to go lower as a continuation entry. And I did enter here. I did entered in a single contract. Okay, and my stop loss was here. Okay, stop loss was here. Let me put the tool for it. So this was it. The entry was there, the stop loss was there, and it got hit here, as you can see. In that, I hit the $33 loss. Okay, not more, because the SL was very small, and it was a single micro. Okay, so that's what it is. And at the same time, I did not notice in that moment, but this was also I was a bit hyped. Okay, I was a little bit hyped because I was kind of emotional at the same time. Not completely emotional on the crying side. No, it was high. The FOMO that I everything I did was right. Like everything I did was right. And let me tell about you the entry about here. Okay, this. Let me show you guys. This is a fucking order block. This is a fucking order block. Okay, this candle here. This is a fucking order block, and price tapped into it. And in that moment, I noticed it clearly. To be honest, I when the price moved lower up to it was here something else, then I noticed it that yeah, this was the order block because the registered price action here. Okay, not the VIX. The registered price action here in this was higher. Okay, this was higher. and it fall and it tapped into it, you can see that it used a fair value gap, or maybe this is an order block and it used it, something like that. So that was also a thing. And when I said I was emotional, this was something, on the verge of FOMO. Okay, I was clear cut. I was in FOMO that, you know, I actually predicted everything right. I forecasted everything right. My narrative is right, and everything is right. Okay, even my drawn liquidity is being hunted at this point, as you can see here. Okay, and I was missing out because I couldn't get an entry because my setup did not give it, and I was emotional at that moment, and I was shocked completely. Like, when I say completely, not completely, of course, I was emotional. The FOMO was hitting. Okay, and at this point, the mental instability a little bit started giving in. Okay, people say you can always fight emotions, or you just have to shut the fuck up and trade. No, that doesn't happen all the time. Even with my last 3 days in the futures, this is the first account of mine in the futures, and I'm continuously. I made a combined today. I made 836 in positive. I did a lot of mistakes too, but eventually my strategy and direction was right. So I made one at the end. Averaging, you can average it like I'm 800 positive on my fund, on my eval. So that's how it is. And now what happened is after this, okay, let me put it aside for a moment. After this, like here I hit the loss right inside, as I showed you. After this the price started retracing, and I was searching for a equilibrium point to use it for entry. Okay, I was trying to get an equilibrium point to entry. As you can see, this is the latest swing, right? And this was the equilibrium point. Here is the 50% equilibrium. Now, where was the entry actually happening? Okay, here as well, I tried to get a better entry. Okay, here as well, the better entry thing was the, and plus the setup wasn't satisfying. Kind of, the equilibrium thing was missing. Just the equilibrium was missing. Other than that, everything was right here. Okay, and here the equilibrium was right, and I was kind of, looking at the intensity of the price. I was trying to get a better entry here, like a really better entry kind of thing. That the price might go into this level up here, and I might get an entry at the limit order was there. And but as soon as I saw this candle, okay, this red one, sorry, this black one, as you can say, which is the bearish candle. As soon as I saw this candle, okay, and this candle moving above, up to the 50% of this candle, I clearly knew that no, if I wait, I'm gonna miss out again. This thing is satisfying the equilibrium, and it's a valid trade entry. Nothing missing, nothing, everything is good, and I can clearly enter here. I entered here on this candle here, okay, on 50% or something like that. Up to, not 50%, but more like here. Okay, let me put back that tool, which I just threw it away. Here, okay, this is it. This was the entry. The stop loss was here, not that high, but high. So why did I put my stop loss here? Okay, let me talk about it. Why did I put my stop loss here instead of using this high and getting a 1:20 kind of trade? No, why did I put that stop loss here? It was simply to handle the heat. Suppose in my ICT has thought always that if there is two fair value gaps present, you have to always plan your trade as that the fair value gap above as well gets covered. Okay, you won't get stopped out just because your SL wasn't enough. So in that analogy, or keeping that in mind, I put my stop loss here, which kind of covered this fair value gap completely, and this as well as to the maximum point. Okay, and I was risking $100. Okay, and then after that, price started moving in my favor. When the price moved up to here, I break even my trade. In fact, I was a little bit here, taking $100 with me. 100 no, not 100, but more like 30 $40. I don't know exact number, but I moved my stop loss here. Okay, then later, as the price created this candle, I moved my stop loss at this high. This is the swing I actually got. Yeah, or you can call it a break. I basically call it a swing high sometimes, because it is kind of a swing high, like this. I don't properly register them as swing highs, but as you can see this the price movement. So that's how it is. Okay. So coming back to the trade, as soon as this happened, I moved my stop loss to this wicket. Yesterday I did some mistake because of that. I missed on $280 and still made 200 on that trade yesterday's trade, but I missed on 280 more. So which was aggressive stop loss movement, and this time I wasn't that aggressive. Okay, my stop loss was here, and as soon as this price came here, moving in my favor this much, my stop loss was here, and when the price was almost to break my TP, okay, I moved my stop loss to here, somewhere around here, and this because I did not want to risk whole profit, like 80% of my profit, just because I couldn't get 10% or 5% maybe. So I was keeping my stop loss here, and price wrecked the TP, and we got the TP. Yeah. And later on, as I said, price was going for this liquidity, all this liquidity accumulated over the time, and price went a little bit lower than that. I was kind of, first of all, my target. Let me talk about the target. Okay, first of all, the target was $300. Okay, here, somewhere around here was the target. And then when I saw the price movement, okay, so the price falling. Okay, I didn't get greedy. I was, I planned to use that uh, volatility in my favor and planning the SLs properly, like moving the stop loss properly too, so that I don't lose on this trade. At the same time, I don't miss out on the maximizing of the trade. And I did that. Okay, I moved my stop loss according to that, and the original target was somewhere around $300. And okay, because I wasn't planning to take the whole target with me. Like, don't I did not want to take this whole low resistance liquidity which got accumulated. I wasn't planning to take that. Okay, like originally the drawn liquidity was that, but of course you always need a piece of the bread, not the complete bread. Okay, then this I was moving my TP2. And here, in this moment when the price was here, I was first of all, I was planning to move my stop loss to this and then move my TP a little bit lower again due to the volatility. I wanted to make maximum use of it, but until then, the price, took out my take profit, and I made $400 on it. 1:4. I don't know why it doesn't show that, but the original trade is 1:4. Okay, and yeah, I made 400 on it, and on the day we are positive 366. As I said, the first loss was 33, and this. So that's the complete trade, and as you can see, uh, as per the as per the target here, the low resistance liquidity just got taken out almost, right? So everything is good, everything was right, and yeah, thanks for watching. This is the trade journal of 21st August, and yeah, that's it.